It says July.
That's just nice.
I knew I was in trouble when I walked in, and Chris had lunch.
Good evening, citizens of Louisburg Town Council. Welcome to our special meeting this evening. We'll begin by having our roll call.
Mayor Neal.
Here.
Councilman Stover.
Here.
Councilwoman Woods.
Here.
Councilwoman Stein. Councilwoman Wright.
Here.
Councilwoman Baker.
Here.
Councilman Clancy.
And thank you. And with our invocation, could I ask you, Pastor Jones, to give us our invocation this evening, please?
Heavenly Father, Lord, we come to you tonight, Lord, giving you praise and glory and thanks for your many blessings in all of our lives. And thank you, Lord, for allowing this gathering to take place this evening, bringing each one safely here. Father, we just pray that you will be with us, each one in this meeting tonight, Lord, and that your will be done in all things. Father, Lord, we ask this be done in Christ's name. Amen.
Amen. The Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Item number 4, the adoption of the agenda for this evening. Can I get a motion to adopt the agenda for this evening? It's been moved and properly second that we adopt the agenda for this evening. All in favor?
Aye.
All opposed? Okay. Okay. Item number 5, our audit presentation. I'd like for, yes, you have the podium this evening. Thank you.
Good evening.
Good evening.
Thank you very much for having this special meeting. I'm sorry that I was not able to attend your prior meeting. I could have done it, except my car wouldn't start that day, and decided it was going to be cantankerous and take 6 or 7 hours in the shop to fix. So, fortunately, that didn't happen today, so I'm here to present your 2023 audit report. And before I start talking about it in specifics, I did want to say a couple things. First of all, we found no fraud, no illegal acts, no abuse, nothing that would lead us to believe that there was anything that was illegal or unethical going on within the city. So that's the first thing I want to make sure everybody is aware of. Our firm tends to look very deeply into the details of items. And because of that, we feel very comfortable in making that statement. The other thing I'd kind of like to explain is why it's taken so long for me to get up here. I know I came and saw y'all sometime in the summer, I guess it was, about what was going on. And I just wanted to reiterate, when we started this audit, we found there was several problems. We were having trouble trying to determine why your cash didn't balance, things like that. And we found out that some of the, and you'll see it in the findings, there was some of the beginning balance journal entries were never made to the accounts. And therefore, the trial balance we got was not representative of what actually occurred in the town for the year 2022 to 2023. After discussion with Sean and Sally DeFoss, who's with the Greg Isley Group, who you've hired to do your report, we got that corrected and we were able to start our audit. Once we started our audit, we found there was some significant issues in areas such as inventory, fixed assets, accounts receivable, cash, revenue. And so part of what we asked was that the town do a full physical inventory of all of your capital assets. So that's all the buildings, all the fire equipment, everything. And obviously, I can say with confidence that your whole town probably participated in this audit more than most towns do, because we had to get to the departments, have them look up and make sure that what was on the asset listings was in fact still owned by the town, that it hadn't been thrown away in a prior year or sold, or there were computers on there from 1997, I think. So we knew it needed to be fixed. Now, something like that is not something that is easily done. It takes a lot of time and effort from the town, and we certainly do thank all of your employees for the help that they provided to us in getting it, but it also takes several months to do. We also asked for a complete inventory for your electric system to determine what you actually were holding in inventory in electric systems. You were using a different method than what we thought was the correct way to report it, and so we chose to ask you to do that. That took roughly a month and a half, I guess, to do by itself. That was the last thing that was actually holding up the audit, was the electric inventory. When we obviously got the electric inventory, because it was done as of June 30th, 2025, we then had to get the town to provide all the information necessary to roll those numbers back so we could get back to the 2023 year that we're talking about. Another area of concern for us was receivables. When we looked at the receivables and looked at what was on your receivables listing, the actual trial balance that listed everybody, you had people who were on there who had not had services provided since 2016. We felt it was necessary at this point to move them off to help free up your receivables so that they look more current. And those people were put into a spreadsheet that you can, if they come back in, obviously, and want to get utilities with the town, they'll have to pay what they owe, and you have a way of checking to make sure that'll happen. But at the same time, it's not $1 million worth of accounts that haven't been seen any light of day in the last 9 years. So these are some of the things that would, and again, something like that takes a lot of time to go through to make sure everybody, you're getting the right people. You have a method in place to make sure that you still get paid if one of those people come back in. And all those things we worked out with Sean and various other people within the organization to make sure that those things were corrected. And that probably took another month and a half. So when you look at those kind of, and the other problem this town has, and certainly a lot of towns of your size have, is that you have segregation of duties issues. It's hard because you don't have enough people to do the job. Because you get a finance officer and they stay for 8 months and then they're gone. Or you get a, accounts receivable person and they don't stay that long, or whatever it happens to be. Towns of your size have a significant difficulty throughout North Carolina. It's not just you, in attracting and retaining the professional help that you need. And so, we could have been done earlier, but then the people that you do have wouldn't have been able to do anything else. They wouldn't be able to do the current year stuff, so that when we got to the current year, it would all been messed up too. So we had to work within the means of what your people had available in terms of time. And that was probably the other thing that caused the length of time for the audit. Now, going forward, I might be as kind of bold to stand up here and say, but I expect no more than 3 months to occur before your next audit is done. And I expect no more than 3 months to occur before your audit after that is done. So that by the time you get to your 2026 audit, you will be on time. I think this is a reasonable goal based on the fact that we have had other clients that we have done this for. And that's been basically the net result. I just had a client that we released in August of 2023, and we will release their 2024 in November, 3 months later. And they had a lot of things that had to be corrected also. So it goes forward because, you know, we're not gonna have to worry about fixed assets again. We're not gonna have to worry about inventory again. We're not gonna have to worry about accounts receivable. There's processes in place to make sure that that's recorded correctly. So these things that are been put in place during the 2023 year are going to carry forward and benefit the town going forward. So I just want to make all that clear on why it took so long for us to do this. And, you know, we're going to make sure things are right. We're not going to sit here and come up here and say, oh, well, it's sort of right. It's right. It's materially correct, but it's right. I spent a lot of time on this job. Unbelievable amount, probably 400 hours or more. So.
I'll ask you a question.
Sure.
Do you have an opinion as to why we got into that situation in the first place?
I think the primary issue you had was turnover. You had a finance officer, well, you had your finance officer moved to administration. You had a gap. You hired a finance officer. Didn't really work out. He did some good things and he didn't know about some other things. Finding a good finance officer in a town your size, because you have to be both hands-on day to day, but you also have to be able to see the forest. You know, you see the trees, you see the forest. In really small towns, they're just busy with the trees. They don't really see the forest. They hire somebody else from the outside to come in and help them with the forest. In the really big towns, the finance officer's not messing with the trees because they got people underneath them to do that. So it's kind of that towns between 10 million and 30 million that seem to have more of this kind of issue. And it was unfortunate, but your finance officers, your last two finance officers didn't work out. They weren't what you needed for the town. I mean, it's just an unfortunate reality in life. I mean, they could be great somewhere else. I don't know. You know, it's just they didn't work for the town of Louisburg. So I hope that answers your question. But it's primarily when you don't have somebody in place to do those day-to-day operations. Somebody else is doing them. They may not know what they're doing. You'll see in our recommendations a lot of cross-training, a lot of, well, you should consider hiring this person or that person, some of which you've already done. Actually, a large number of things you've already done because we're talking about 2023. But I think the big issue was that you did not have continuity in your finance department, and that really hurt you.
And you say you're gonna make recommendations.
Yeah, we have.
We're not gonna do this going forward.
There's a corrective action.
Or try
Back.
that. Yeah.
Well, there's a corrective action plan and there's also recommendations from our findings. For every finding that we make, we have a recommendation on how to correct that finding. And then you have responded with a corrective action plan on how you plan to do it and by when you plan to do it.
Mm-hmm.
So you have a full sort of roadmap in front of you to identify how to solve these issues that you have as best as you can. Obviously, you know, turnover is a problem that faces many governments. I have other clients who I've had one client who, since I started working on them in January, they got a different town manager and a different finance officer from when I started. So, you know, turnover is a big difficulty among government. There's not enough governmental accountants or accountants who are interested in being governmental accountants to
Imagine why.
solve. Well, I love it. I don't know why. But then I've been doing it since the 80s. So, the first page that I want to talk about in your report is actually page 1. And I just want to point out, the reports say draft, but the numbers are final. The only reason the reports they draft is because I didn't have this little set of piece of papers in my hands till tonight, and I printed the report this morning. Tomorrow, the report will not say draft. So, and we will be issuing to the local government commission the reports and the rest of the requirements this week. So before Friday is over, that will be, all of this will be submitted for approval to the local government commission. But page 1 is our opinion letter. And basically you can get several types of opinion letters. You can get an adverse, which means we don't agree with what the financial statements say. You can get a modified opinion which says, well, other than this one area, we agree with everything else, but this one area we think is kind of wonky. Or you can get the clean and unmodified opinion, which is the highest level of assurance that any accountant can give to any organization. And you receive the clean or unmodified opinion, which is the highest level of assurance. I know I'm repeating myself, but I like to say that.
Like to hear it.
The next thing, and I just want to tell you this for your own edification, there's something called the MD&A. It starts with, actually it probably starts on this slide. Oh, here it is. The MD&A, Management's Discussion and Analysis, is a very good overview of the town. It'll provide you a lot of information applied. It's kind of a summary of all the things that went on during the town that's talked on later in the report. The idea was, when it was first developed, was it was a way for users to be able to get good information on the town without having to go into a deep dive into the rest of the report. Now, I suggest, obviously, as council members, you look at the entire report, but the MD&A is a great place to start because it'll kind of give you a feel. It's got comparative information compared to the prior year. That kind of information is very useful in terms of making decisions. So it's about 8 or 10 pages long. It's not too bad. It's supposedly it was written so that a layperson can understand it, so someone outside the accounting world can understand it. I don't know about that so much, but I do think it's well worth reading. If you don't do anything else, anybody, reading the MD&A is always a good first step. No, you're gonna have to excuse me because I can't see without my glasses. So I won't be able to see y'all now, but I can see the pages. The next page is page 13. This is your statement of net position. This basically shows, for on a full accrual basis, basically a corporate level basis, all the information regarding all the assets and the liabilities. The key fact that I want to point out is that you have about $8,927 $8,927,000 in net position, most of which is tied up in your fixed assets. Obviously, you can't spend your fixed assets, so the $8,331,000 that's in there is unexpendable, but it is a good reference point in terms of just looking at how the balance sheet, the financial statements look. The next thing I want to point out is the next page, page 14. And in page 14, we're going to talk about two things. One is that you had a change in net position, which is basically net income, of $798,000 positive. So from a full accrual standpoint, the town increased your net position by that amount of money, almost $800,000. And it was broken $307,000 between governmental activities, which would be the general fund and the capital project funds, versus the water, sewer, and electric contributed about $491,000. If you read in the MD&A, it'll actually tell you the percentages each one of them contributed, as a matter of fact. The other thing I want to talk about is what's called the prior period restatements. One of the issues we had is we found items that we thought should have been booked in the prior year. Now, this is our opinion. It has nothing to do with the prior year auditor. This is how we think, our firm thinks. And once you find one or two, you kind of just want to accumulate them all and get everything right, because I want the beginning balances to be right so that the ending balances can be right, and you get a true indication of what your actual revenues and expenses were for the period. So unfortunately, there's a couple large prior period adjustments, particularly in the water and sewer fund, that I'll discuss a little bit later. But because of that, there was about a $6 million drop in the equity in the water and sewer fund. And I'll go through those in a little bit more detail in just a minute, but you can see those. They're down at the bottom of the page. They're almost at the very bottom of the page. They say prior period restatement error corrections. And I do want to point out, this is different accounting firms do different ways of auditing. So this is no disrespect at all to the prior year accountants at all. They, I didn't see what their work papers looked like. I'm sure they did what they thought was reasonable and probably under the standards. We just tend to, when we find a little bit, we want to go see if this is wrong or if this is different than what we think. And one of the things we really tried to do, and you'll see this in the prior period adjustments, is we've got prior period adjustments as small as $6,000 in the electric fund. That's clearly immaterial, but might as well book it and get it in there so that it's correct as you move forward. And this is what we're talking about. When I was talking about it, took a long time because I wanted to make sure we got everything in there so that as we move forward, all this stuff is taken care of, everything's correct, nothing's going to jump out one year. For example, accrued salaries is basically immaterial most years. Every once in a while, it'll be material. And so do you want to have to deal with it in that year that it's material? If you just go ahead and book at the beginning of the year, or have the beginning of the year and you have the end of the year each year, then when you get to that year that's material, you don't have to worry about any other effect. You got the effect of just that current year. And so that's why we have a lot of prior period adjustments, because I want to make sure we had just the effect of the current year to be reported, so that those numbers that I just spoke about, the almost $800,000 worth of income that the town increased their net position by, is based on what actually occurred during 22-23. I'm going to bounce a little bit deeper. Page 17. This is your governmental funds. Basically, you had about a $387,000 loss. Most of this is a result of accruals or deferred revenue. Deferred revenue is a case, and you'll find it in one of our findings where we talk about this, but deferred revenue is typically in governments, if you don't collect it within 90 days of year end, then it can't be considered to be revenue. Where on a full accrual basis, if you earned it, it's revenue. So there's a difference that's accounted for between these two types of accounting. And that's a large reason why you have a profit in the full accrual and a loss in the fund statements. I know some people it's a little confusing at times, so I always like to point out that fact. And in particular, one of our recommendations is going to be that you should have somebody looking very closely at your grants. I think there was a lot of lost opportunity in terms of getting your grants collected on time, particularly because I think you had changeover during that time period after the year end of 2023. And, you know, you didn't have somebody in there who was, we need to get this reimbursement filed. We need to get this reimbursement filed. Those things are very important. I mean, you probably have, you know, I know you have several $100,000 in 2023. I don't know about now, obviously, but in 2023, you had several $100,000 that if you had collected them earlier, they would have been revenue. But they weren't because the reimbursements were later getting done. Nobody was following up on them. Nobody was asking the governmental agency why they hadn't paid, those kind of things. So we have a recommendation regarding that also. On page 27, and I'm just going to kind of jump around a little bit right now, it talks about your restricted cash. Basically, your restricted cash comes from several areas. One is money you received up front that you haven't expended, like power bill funds. I think you're all probably familiar with power bill funds and how that works. You get a lump sum, you don't spend it, it adds up to be restricted cash until you do spend it. You can't spend it on anything else but power bill eligible expenditures. So, but we also added something this year called USDA reserves. When we looked at your debt had, which a lot of is tied to the United States Department of Agriculture. They require what's called reserve amounts. They don't require you to set it aside in a separate bank account, but you are required to report it as part of your financial reporting package. So we included, I don't know, it's $180,000 roughly between USDA reserves and the governmental activities and also the business type activities. We wanted to make sure that you could see that and so that you were aware. Actually, I guess it's more like $160,000. I can't remember the exact number now. There's way too many numbers in the city. Still moving on, we're going to just flip a few pages. Page 31. Okay, halfway down the page is the stewardship, compliance, and accountability footnote. This is a required footnote from the local government. The first part is non-compliance with North Carolina general statutes, which is that you did not file your audit report on time. I don't think there's any question about that. I don't think there's any argument, but that, you know, we're required to report that. I'm not quite sure why, but we are required to report that. The next one, which is not a non-compliance with general statutes, is deficit fund balance. As it turns out, after we did the work on the North Main Street Sidewalk Capital Project, you basically spent more money than you have put in there at this point. That creates a deficit fund balance. And that is something, because it is a capital project, it's not like it's an issue as if it was a general fund or the electric fund, but it is something we are required to report. So the third item is excess of expenditures over appropriation. And this one is pretty self-explanatory, but the town's Joyner Park capital project, you actually never made a budget amendment to add the $10,000 you spent over roughly. However, this is the last, 2023 is the last year that fund was open. So it's kind of you can't do it now. And it's just something we need to report. I don't think it's going to give you much grief from anybody, but it's just something that the town needs to watch to make sure that, particularly as you get to the end of these capital projects, that you don't have over expenditures at the very end that drag your capital project into a negative deficit area and therefore cause a budget adjustment. So you need to make sure that when you look at these capital projects at the end of their lives, somebody hasn't made a change order that they needed, which is what I'm guessing has happened here, needed another $10,000 to finish out the project, and it just never made it through the budget process. Obviously, all expenditures need to come from the budget. I mean, that's the state law and that's the requirement. Okay, we're gonna slip all the way down to page 54. And this is our error corrections, and I'm gonna kind of just run through these very quickly, other than maybe a couple of them. Your error corrections could basically be seen, and if you look at the bottom, or right at the bottom of that little schedule where it says water and sewer fund, you'll see we had a $5,929,000 error correction, which means your fund balance was previously overstated by that amount. Now, I'll get to that in just a second, but most of your error corrections come in one of four ways. One was accrued salaries, which really was not material, but we booked it anyway, just because we like to do things like that. The next area was receivables. We found errors in terms of you're supposed to accrue 3 months of sales tax, you had accrued 2. Your ABC beginning balance and ending balance revenue was off, or receivables were off from what they owe you, so we corrected for that. You know, we basically go to the report for the ABC board of Louisburg, or Louisburg ABC board, I can't ever remember the name. But we look at that and then we match that to what your financials say to make sure that they're in agreement. In addition, the county money that is collected in June for property tax, fire tax, everything the county collects in June is not remitted till July. And that should be recorded as a prior year receivable, just as when we got to June of 2023, we needed to make sure that whatever the county had collected, because it's when it's collected, it's not when necessarily when you received it that you have to recognize this stuff, because you receive it in the next month. So what the county collects in June, they give to you in July. So we had to adjust the receivables related to that. The two areas that I really wanted to touch on are on the next page for the water and sewer fund. One of the things we did as part of looking at your assets is we questioned whether you had your previous sewer plant was still on your books and it had approximately $2.3 million worth of value associated with it. Under a number of accounting standards, if it's no longer in use, if it can't be salvaged, if it's not operational, then you need to remove it from your books. So we did. So that was 2.3 out of that 5.9 was that. The other, and this one's a little bit harder to explain, but you had approximately a $3.5 million adjustment because during the accumulation process of coming up with what the totals of your fixed assets were, there was 3 listings. At the bottom of the first listing, it totaled up the other 2 listings. So the first listing had all 3 listings on it. However, at some point in the past, a mistake was made and the first listing was then added to the second listing, was added to the third listing. So there was a calculation error in the amount of $3.5 million that had to be reduced for your sewer line, basically your sewer line assets. So when you take the 2.3 million and the 3.5, that's 5.8 million of the $5.9 million worth of difference. So that's where your major issues were with regard to it. One was you still had on your books something that had actually gone out of service in 1994 and hadn't been depreciated since that time that we could see. And so we felt it was best just to remove it from the books. The other was an error that we found when we were doing the fixed asset accumulations. That was a result of something that had happened at some point in the past. We have no idea when. But we found it and so we fixed it. So when you look at what that big number is, remember it's those two things. It's really not much of anything else. So
It's basically an accounting error, not a real loss.
yeah, it was a calculation error. They basically added something twice. They added sheets 2 and 3 twice to the total assets, and that created the error. Unfortunately, those amounts were $3.5 million. So it was a large number. And, I can't tell you when it happened or any of the rest of that. Okay, well, since I told you all that bad stuff, let's talk about something good. Let's go to page 91. As you can tell, I do love financial accounting for government. Page 91, I just want to point out that your total collection percentage was 99.08%. That's very impressive. Obviously, the local government gets upset if it's below 97%. They make you respond as to why. But I very rarely see anything that's above 99%. So the town definitely needs to be commended on getting out there and making sure that you got your current year property tax collected for 2023. And if you look at your reports over the years, it is a very strong part of this town that the people pay their property taxes. You don't have low collection percentages in any of the years that I looked at. I know Sean and I looked at, for other reasons, we were looking at other older financial statements, and in those you had high collection percentages, higher than normal. Not just high, but very good. So the town certainly deserves to be commended for their collection percentage. Okay, I'm gonna skip over. We have 2 opinion letters that I'm gonna pretty much skip over. When we come back for the next meeting with the bound reports and your communication, Robbie, the partner, will probably go over those in a little bit more detail. The thing you should know is that you have a number of findings, which is what the first report talks about, and then the second report, which is on your ARPA money expenditures. We tested those as part of what's called the Uniform Guidance, or some people know it as the State Single Audit Act. And we found, while we found an issue, you still got a clean opinion. Again, you could get an adverse opinion, a modified opinion, or a clean opinion, and the clean opinion is the best, and that's what you did receive. So the 2 reports that you have that have an opinion in here, they're both clean, which is the best you can get. Now I'm going to talk about the findings, and I'm going to be very brief because there's a lot of them. It's easier if you just read them. If we start with finding number 1, the obvious one is that you have a segregation of duties issue. You don't have enough people to make sure that you have somebody who's different from processing, from implementing, and who reviews all the transactions. Not unusual for a town of your size. In fact, I write this one probably more than any other I ever write.
What page is that on?
It's page 101. Sorry. That's finding number 1. There's actually 12 findings all total. Our recommendation, obviously, is you should consider increasing the number of people so that you can get away from the segregation of duties. That is, I don't care if you're a big city or a small city, if you got a segregation of duties issue, unless you can reallocate work duties a little bit, which you can to some degree even in your town, but you can't get rid of it without actually having additional people. having a full-time finance officer like you now do helps a lot. Making sure you have a HR person, making sure you have segregation between the people who are collecting the money, the people who are accounting to make sure they collected the money correctly, the people taking it to the bank, as much as you can. You do have some good controls in place, but you just unfortunately don't have enough people to cover some of the, like grants, things like that. Finding number 2 is your audit statement is late. Your audit financial statement is late to the LGC. I think, again, that's just a requirement that we tell you. I'm sure y'all are very aware of that at this point. Finding number 3 is recording of revenue and receivables and reconciliation to subsidiary ledgers. Generally, and you'll see I've listed some of the numbers for some of the things. These are not all the transactions that we found that are related to this party, but this is a representative example of that. Basically, this goes back to your segregation of duties. You don't have enough people that you've got somebody who can make sure that this has been put in the right place, that this journal entry has been made, and it's been made to the correct accounts. We found several journal entries where the accounts were wrong, or in the case of like your utility receivables, that the utility receivables are regularly reconciled back to your actual listing of who owes you the money, so that your numbers in your trial balance and your financials actually agree to what your detail is from your utility billing system. Your utility billing system seems to be working just fine, but not having that reconciliation allows that number to drift, because you may end up with somebody posting the wrong thing in there or something like that. And you need to reconcile between these actual listings of what people owe you and what your number is that you say on the financial statements that they owe you. Again, we recommend that you need to have more training done. And you're probably also going to have somebody else who's available who can do those kind of things. Number 4 is grant reimbursements. I think I've talked about this. You really need to hire, honestly, the town, particularly with your downtown revitalization and the millions of dollars associated with that, and the other projects you have, like your sidewalk funds, things like that. You probably need to have somebody who's responsible for grants, like a grant coordinator, a grant administrator type person. I understand that you have been looking for such a person, so it should not come as a surprise to you. You've already realized this, but that would be our recommendation: is you need somebody who can focus on these grants. For one, collecting them earlier means more money in the bank accounts of the town, and 2, a lot of times, particularly towards the end of grants, it's nice to have somebody who knows what the grant is, who's talking to the federal agency or the state agency that can say, oh, this is what we're spending on, this is what we spent it on, this is what's left, and this is how we're going to meet it. So that as you get close to the end of the period, you don't have where the state government or the federal government is saying, you didn't spend that money, we think you should give it back to us, or we're just going to close this account. You need somebody who can be an advocate on part of the town so that they can absolutely make sure that you're getting all the money that you should get when you agree to these grants. I mean, you have $916,000, I think it is, in clean air quality grants for sidewalks. You've signed 4 or 5 over the last 3 years that I looked at. There's a need to make sure that, and they're different. Some of these are different grants, and first of all, you can't let them overlap, and you've got to make sure everything's right on them. So it really would behoove you to maximize your dollars by hiring somebody to do that. Statement of five, I've already talked about, it's the recording of your capital assets. Obviously, since we made the town do a full capital asset inventory, you need to make sure that you have somebody who can handle that internally to make sure, whether it's you pass it down to department heads, which they're not gonna like to hear, but or it's being done in some other way. You need to make sure that all your capital assets are being recorded as they should be, so that you have the truest financial picture that you can for the town. Number 6 is the error, the clerical error. We've already talked about that. I'm not going to dwell on that one again. Number 7, we found the number issues in your payroll. The most important one was the amount of time that you were spending doing your payroll because of the way you had, and I think you've already corrected this, Sean, you all have corrected this. The amount of time you were spending because you were using a 28-day cycle for determining overtime for police and fire when, and unfortunately, because you went from week to bi-weekly, it didn't sync up. So you basically had like 1 week of 1 2-week pay period, the next 2-week pay period, and 1 week of the next 2-week pay period. And you had to use that information to come up with what the overtime is you were going to pay. So that alone, it was taking your finance people a significant amount of additional time to do that. So that's something you've already corrected. Obviously, we saw it. We're making a recommendation that you switch so that you're using a 14-day and go that way. But, you know, that was something that your payrolls were getting done like on Thursday instead of Monday, because everything had to be calculated once a month so they could figure out whether or not you owed somebody overtime. There was also a few other issues associated with payroll. One of the big things you need to make sure of, and I've talked with Jennifer. Is Jennifer here? No. I've spoken with your finance officer, is to make sure that your supervisors are initialing the timesheet or approving the timesheet for every employee so that you know that you're paying them for the right number of hours. Obviously, the supervisor is somebody who should know. The big thing that we as auditors like to say is you got to take credit for what you do. And if you don't initial it, there's no evidence you did it.
That's right.
So we can't say you did it. And so we found a number of cases where that was not done. Whether it was reviewed or not, I couldn't tell you, because there was no evidence saying that this person reviewed this person's time card or whatever. So that's another thing that's in this particular finding that, again, is very straightforward. You make sure that the supervisors are reviewing it all. You know, that this board can make that an emphasis point. And that should be enough to help make sure that the department, because it's basically department heads and supervisors who are the people who should be doing this work. And, you know, I think you've got enough of them and they should be doing that. I mean, it's simple enough to put your initials on something after you've looked at something. I'm not saying they didn't do it. I'm just saying we can't tell. But I always take credit for the work you do. Finding number 8 is lack of general ledger detail and journal entries. Basically, your general ledger, when you have a general ledger journal entry, it should be reviewed by somebody outside of the person who did it. And in a lot of cases, particularly in 2023, when there was only Sean, or when Ruben was doing it or somebody was doing it, there was no sign-offs or no acknowledgement that somebody was reviewing it. A lot of the errors that we found that we had to correct, and when we get to the next report, you can see all the audit journal entries we had to make, which were a lot. You will be able to clearly see that that's something that needs to be done so that because it's very easy. I mean, nobody's perfect. And if they key it into the wrong account and nobody reviews it, it's going to stay in that wrong account till the auditor finds it, and then it's going to be a finding. So to avoid that, there really needs to be a good review. This could also go back to your segregation of duties issues, particularly because during the last 3 years, you've had periods where you haven't had enough, you didn't have a finance officer, or the finance officer was not performing this or documenting that they weren't performing this procedure. So again, it's one of those things that you can easily fix. You just need to make sure it gets done. Finding number 9 is the recording of unbilled utilities receivable and revenue cutoff. We found a number of issues with, you did not record what's called unbilled utility receivables. We have corrected that issue. We will help you with that each year. But basically, when you bill in July, some of what you bill in July was actually used by the consumer in June. And under, I think it's GASB 71, but don't quote me on it. If my partner is here, he could tell you the exact, page number and whatever GASB it was. When you delivered the service, you should be recognizing the revenue in utilities, water and sewer, electric is what I'm talking about. So there should be what's called an unbilled utility receivable, which is basically you take the July billing and you break it between June and July and create a receivable, and it goes to your revenue, and each year you will adjust it based on what your numbers are for that July billing register and when you actually read the meters. So now that it used to be a real pain, quite frankly, for towns to do, because back in the old days, you read everything by hand, which meant that you had 19 cycles, I think here, on 19 different days. So you would add 19 different calculations. Whereas now you read them all once. So you have one calculation for whatever day that happens to be. So it's a much simpler task than what it was before the advent of the radio meters that you now use. And I believe this town is pretty much up to date on their radio meters. I think there's very few accounts that are being read by hand at this point. So another kudos to you, because that is an area that certainly simplifies the level of work that's required for your finance department to make sure that they've recorded everything. Finding 10 is specific to one item. You had a state capital infrastructure grant that you received $700,000 in 2022. The grant ran from July 1st, 2021 to June 30th of 2023. So only expenditures associated in that time period. You had 504,000 or something like that in expenditures. So the rest of the revenue, because you received it up front, just like your power bill money, it's not revenue, it's unearned revenue. And when you make the expenditures, it becomes earned revenue. And that was just one of the errors that we caught and fixed. And so you get a finding on it, basically. But it was related to just one grant. I just want to make that clear. It wasn't a whole bunch of things. It was one grant that was related to. Finding number 11 is the electric inventory finding, because obviously you didn't have it on your books before we asked you to put it on your books. Now, on page 112 is the finding material weakness and internal control over reporting associated with the audit of your ORBA. This is the last page I'm going to talk about. What happened here was The town went through the process. You got your ARPA money. You did your budget. You said, this is what we're gonna use it for, revenue replacement, and this is what we're gonna expend it on. And then the town went and expended it, just like you said. No problems at all. However, there's a annual report that the town had to file based on the level of money that you got back to the federal government. The annual report said you spent the money on something completely different. This was done by one of your finance officers in July. This is sort of an explanation of what went on in regard to that. You have the ability, fortunately, because the COVID money has basically been very flexible in terms of the reporting. You have the ability to go and correct that to what you actually expended it on. And that's what this finding is about. You still have that ability, you still have time to do it. So, you need to file a report and get it right at the federal level. But simply put, it was the finance officer at the time decided she was going to do a budget amendment, but never presented the budget amendment to the board for approval. So if you don't approve it, it doesn't exist as far as that goes. So you spent the money, and this is what's important, I think, out of the whole thing is you spent the money on what you said you were going to spend the money on. There wasn't any question about that. It was just the reporting said you spent it on something else. And so that needs to be corrected. And that is the audit report. Now, the next step, obviously, that when we come to the next meeting, one of the things we're going to talk about is there's a communication with those in charge of governance. And it'll have stuff like all our journal entries, any past entries we made, because I think we actually passed on one entry very late in the report writing process, as we tend to do, because we don't have to change 10 pages in the report writing process when we get close to the end. The past adjustment would be clearly immaterial and have no effect on any user of the financial statement, whether it was included or not included. The journal entries are basically documentation and all the stuff we found. We did make a number of other suggestions. One of the suggestions that we have talked about is with your inventory, is having a work order system so that you can better track the ins and outs of your inventory. The work order system you have or have been using was more dedicated to customer concerns as opposed to we had a transformer blowout, so we need to put a new transformer in at such and such place. It was more like the bulb in my light, in my area yard light went out at such and such an address. I need somebody to fix it. So you need a work order system that's related to what's actually being pulled from your inventory. That'll give you a much clearer understanding of what exactly it costs you to maintain your system. By using this work order system, it'll say, well, we used 9 transformers this year, or we used 30 transformers this year because we had to replace that many. So that's what that work order system is in place to do, is to help give you an idea of exactly what it's going to cost you moving forward to operate the distribution system to your electrical utility. The other suggestion, which is not in any of this, that we are making a suggestion, and we are asking that you hold off until we get you caught up, is we think you probably ought to look at other financial software. The financial software you have, not that there's anything terribly wrong with it outside of payroll, I think, is very old. It's not updated. It's not really, even though there's support for it, it's not really supported in terms of what you would say something new would be. They don't do upgrades to it. It's just kind of, if something goes wrong, we'll fix it, but that's all we're doing kind of stuff. And you probably need something that's a little bit more adaptive to what your needs are. I'm not saying you need to do it now. In fact, I'm not saying you need to do it anytime in the near future. I certainly will, when I stand up here one day, say, yeah, we're caught up. So now you can look at that kind of stuff. I don't plan for that day to be too far off in the future, but it's a little bit farther than right now for you to start thinking about. Can I answer any questions for anybody? Okay, well, again, I thank you for being patient with me. I really do appreciate. I personally think you have a very nice town here. I think it's a great place. I think you have a lot of really good people working for you. I think you just have some holes you need to fill to have everything you need to be moving forward as this town grows and expands as it moves forward in the future. So I think overall, our suggestions are primarily to plug those holes in to make sure that you don't have these kind of issues. And your financial software should be good on any day of the week, not just after the auditor has spent 9 months going through it. Thank you very much.
Well, I want to thank you for bringing this long-awaited report to us.
Well, the next one will not take anywhere near this long, I promise you that. I already have people scheduled for it.
Okay, and
Give that thank you, and then it seems like we've got a good foundation to move forward.
And that's the big thing, is we wanted to make sure that your financial statements were as correct as we could materially make them, so that we know now that you got to do an accrued payroll, you got to do an unbilled usage, you got to do, tie your receivables out, things like that. You've got to roll your fixed assets forward and check for stuff that is no longer in service. So those kind of things are things that you are now well aware of. Sean is now well aware of for sure.
yeah,
And I would say certainly a lot of people within your organization beyond Sean are well aware of. So I think going forward, it should be a much easier audit from our perspective, and certainly a shorter period of time from your perspective.
just take a moment, just give our audience, lay people, if they have any questions of you that, that they may have as it relates to this. Does anyone in the audience have?
No, everybody leaves when I talk.
Okay, if not, we will, again, thank you so much.
Thank you very much.
James, thank you.
Thanks for the rep letter, because tomorrow I'm issuing to the LBC.
Okay. All right. Council, there are no other questions. Last item is a motion to adjourn. All right, it's been moved and properly second that we adjourn. All in favor?
Aye.
All opposed? Again, citizens, thank you for coming out. Thank you so much.